Germany, once a beacon of European fiscal stability, now appears to be faltering. What started at farmers' protests against fuel costs turned into a full-scale mass movement. Public transport workers keep going on strike and flights are grounded. And more than 1 million people took to the streets to say no to extreme right groups. Latest research shows that 50% of the population feels insecure about the future and the ability of the government to shape it.
Extremely difficult economic conditions and high inflation have caused people to have less money. At the end of the month, there is simply no money because you have to spend it on food or energy, the high increases in prices, and that naturally continues in the form of weakened consumption. And weakened consumption is not just about going out to restaurants or to the cinema, but also goods that are simply not bought.
Economists say the worst may soon be over, but the latest numbers don't offer much comfort about economic growth in 2024. Industrial production declined by 1.6% in December on a monthly basis, and it was down 1.5% in 2023 overall compared to the previous year. Exports fell by 4.6% in December and 1.4% or $1.68 trillion across the year. But factory orders data seemed promising at first glance as it reflected an 8.9% increase in December compared to November. High energy prices, lower industrial output and train strikes contributed to Germany's downturn last year. The IMF predicts that Germany will be the slowest growing major economy in 2024 with just an increase of 0.5%. But despite all struggles, German Finance Minister Christian Lindner still predicts an economic upturn once Germany implements new labor market and corporation tax reforms and secures more private investment, including in major infrastructure. Tulay Kalyon Haznedaroglu, TRT World.
For more on this now, let's bring in Andreas Jacobi. He's a HSCIE partner, investor and advisor. Thank you very much for joining us this morning. So let's start from the reason behind this disappointing growth figures that we've seen. The European energy crisis in the spotlight. Clearly, Germany suffered a lot from the spike in power and gas prices in the last few years. But however, these prices have really now reverted to much lower levels. Why isn't the economy benefiting from this correction?
Well, there's a couple of factors to it. So first of all, the prices are still about 50% higher than they were before crisis levels. And they also are still twice as expensive as, for example, US energy prices. So that still puts German companies at a disadvantage on the global market scale. Another issue is that there's a lot of uncertainty in terms of how secure the energy supply will be going forward. So there's still expected to be future hikes, both in terms of infrastructure costs, but also energy costs, because there are sorts of issues also with liquid gas supplies, building the terminals, etc. So in general, the industry is a bit concerned about what is going to be happening in the future and how will prices develop.
Interesting. And what about geopolitical tensions too and their impact on the German economy? I wonder, what's the current impact of tensions in the Red Sea on the domestic economy specifically?
Well, first of all, obviously, Israel is quite an important trade partner for Germany. However, as I feel, the bigger issue here is all the issues on the Suez Canal and all the attacks on the supply chain, i.e. on cargo ships and tankers, that are an issue for the supply chain and increased costs and uncertainty.
How is energy transitions developing in Germany, and to what extent is this connected to sluggish growth? Because some analysts have actually touched on this point as well.
Yeah, so Germany is kind of far behind on its plans to grow the renewable energy sources, and there's a couple of issues with this. So first of all, building all the wind farms, solar panels, etc., is more difficult because there's a lot of red tape and administrative regulations around these sort of things, which have slowed down the building of these plants. At the same time, one of the things that we see is that there's the shutdown of the nuclear power plants, which obviously took away a lot of Germany's past power supply and cheap power at that. And the last point is that there's quite an issue with the power infrastructure in terms of transporting power from solar farms or wind farms, let's say in the North Sea, to southern Germany, where a lot of industry is located. So that is parts of the issues. Now, just recently, there's also been a couple of subsidies that have been cancelled, which the industry and also energy companies have been relying on.
So several problems there on the traditional energy front, but not only, also on the renewable energy front. What about the Constitutional Court decision to declare unconstitutional the reallocation of 60 billion euros from the pandemic relief to its climate and transformation fund? What consequences will this have on the German economy as a whole?
Absolutely. So as I just mentioned, so a couple of subsidies, especially for renewable energies, have been cancelled. So that's one impact on that question. On the other hand, what we've seen since is that there have been a lot of investments and subsidies cancelled. At the same time, a number of taxes have actually been increased. So namely, the CO2 tax has been increased by 50%. The tax on cargo traffic has been increased, which obviously increases costs for the supply chain and for cargo for the companies, which simply increases costs on top of higher energy costs, on top of a lot of regulation in Germany, which just makes it very difficult for German companies to compete in a global market space.